This is the ARK fund, ARKK. And just to give you an idea of how it's doing year to date, stock closed at 113. It's down about 9% year to date versus the NASDAQ, which I would say is its best benchmark. NASDAQ is not doing so hot this year either, but year to date, the NASDAQ is up 5.78%. So we'll be generous to call it 6%. But the ARK was beating the pants off of everybody. So let's see what the deal is and why. ARK Holdings is Tesla, almost 10%, TELEDOC, which has been absolutely crushed, Square, Roku, Zillow, Zoom, which has been absolutely crushed, Shopify, Baidu, Exact Sciences. So these top 10 stocks make up almost 50% of the stock I'm on. ETF.com, by the way. The reason I say second-tier stocks are doing so badly and you don't really see it is because most of these second-tier stocks like TELEDOC and Zoom, they're not in the S&P 500. Tesla is, but that's just one stock. So in my opinion, ARK is not a new movement. I don't think it's a new paradigm. I just think it's just another fund that rode the hottest tech stocks. And now that they're going down, the fund is going down with them.